Alright guys, so this video is a recap of what you learned in the class, right? For swing trading, just a recap. Okay, so first thing first, like what I told you in the class, whenever you want to look at the chart, please make sure that it is a 1 hour chart, right? So this thing should be called 1 hour and not 2 hours or 1 day or what 1 minute, right? It should be a 1 H chart. All of you should know that. Okay, second thing, when we look at the chart, usually we do not look so zoom out, right? You can see that as of this recording, today is a Sunday, right? The market is closed, so that's when you start to do your homework. Okay, your homework basically is called trading plan, KIV long or KIV short, based on what I have taught you. All right, so if you can take a look at this, this is too far, right? We are looking at almost about 2 years data. We do not need to do that. Most of the time, we are looking at approximately about 1 to 2 months. I think this is more or less enough for me, right? Next thing, make sure you have your major trend there, like what I told all of you. Major trend is called your EMA 20, right? Make sure your EMA 20 is there. You can see that mine is here, but I'm hiding it. Once I'm on it, you can see whatever that's there, right? So as of today, the first thing that you must do is always analyze the market, right? The market is very clearly called a major downtrend, right? You can see that it has been dropping since here, right? And every time it hits this major trend, it starts to drop. We try to hit again last week, it tried to drop again, right? So as of now, we are caught a major downtrend, right? Which means most stock will be also a major downtrend, because if the S&P is a major downtrend, everything will be down as well, more often than not, right? So it doesn't matter, right? But you must have a rough idea of where the market is now. So you then naturally find more KIV short than KIV long, which is okay, right? So what you want to do next, right? Of course, you on your watch list. Your watch list is at this corner here. Uh, if you only have 20 stocks or 30 stocks or even 40, I want you to add more, right? Add until maybe you have 50, 60, or even 70. Personally, for me, I have about 180 stocks here, right? About 180 stocks. So what I will do right now is, of course, right, I will just start scrolling through. So the first stock, I'll take a look, right? And I see that, what is this? The only thing you need to ask yourself is called major trend and current trend, like what I told you, right? Major trend is, to me, not sure, because this is not more than 3 days yet. So therefore, I can't be sure of it. But as of now, it looks quite nice. Why? Because it previously was all below. Let's take a look. The more you buy, the more you lose. And as of this day, there's a bullish engulfing, sorry. And then the stock started to push. Now we are up above, right? And if uh, on the next 2 days the stock is able to let's say do this, I will say that this is called your a major uptrend, because that's called 3 days, right? And then you start to do a trading plan. For example, you think that there's a resistance here, you can draw a straight line. Once you do that, right click on the line, add alert on trend line, right? When this stock cross the trend line, blah blah blah, create the alert, right? And when they do ring, that is when you check out for your other chapters, right? Your chapter 2, chapter 3, chapter 4, chapter 5, so on and so forth, right? So that is for example, one trading plan, assuming this thing happen, right? So when that happens, assuming I want to do this, if this is USB, most of the time I will put as, for example, purple color. So purple color are stocks that are grade A, for example, right? So that I don't have to look at them again and again and again. So I would actually go through my whole watch list one by one. I'll look at the second stock, the third stock, the fourth stock, so on and so forth, right? And then if it's a stock like this, I will definitely skip, right? All of you should know, right? This is very choppy and sideways. We are not sure of the trend, right? A while down, a while up, a while suddenly crash, a while up again, right? What if you try to buy here and it drop again, right? So on and so forth. So skip all the way until you find something good. Like for example, right? If you take a look at this stock called Boeing today, Boeing is very nice. Why? Isn't this called major down, right? It's below the EMA, right? It has been dropping since 160 all the way until here, right? And now it is bouncing up. It is already at the resistance, and the resistance has been rejecting. Look at this very huge bearish engulfing, right? To me, that is called a weakness. So major trend is down. Current trend is what is happening nowadays, right? And obviously, I can draw a line like this, please do not draw a trend line like this. This will be totally stupid, right? If you draw this trend line, that is called cutting through everything. There's something below it. It's definitely not good, right? So as of today, I would just draw a trend line on Boeing and then right click on it, create the alert, right? Create. If you want, you can type something, KIV short, measure down, current up, price is already at resistance, looks like rejecting, wait for breakout of trend line, confirm with candle and volume, etc. Right. So once you create the alert, right, it will ring if it touch the line. Right. If it touch the line, it will ring. So when it rings, that's when your phone will ring, and then you take a look at the hourly candle by the end of it to see if you want to see, as in you see what you want to see, right? So you can see that this is only maybe the number 7 or number 8 stock on my list. I have 180, so I will one by one and just look through all of them, right? One by one look through, right? And then see if I see something nice. If there's something nice, I will actually put it down, right? So I'll go one round very quickly. Usually this type of stocks are totally rubbish, right? It's a waste of time here, right? There's nothing you want to do on them, right? So we will just continue to see as of Pfizer today. Pfizer is also very beautiful, right? Isn't this called major down, current up, something like this, right? We are waiting for it to hopefully reject and then maybe come down a bit, and then at here, if it has a good setup, we will try to short it further, right? After all, the stock has been doing that always, right? For example, right, there's this same thing. If you see today, Coke is here, imagine, right? So if you scroll out too far, you will think that this chart is rubbish. Why? It looks like shit. Look at here, right? But that is so long ago. Take a look. This is May. This is June. This is July. This is August. But what we are looking at now today is October, right? September. So what we want to look at is whether has it been clean at least for the past 2-3 weeks. Which, if you ask me, the answer is yes. Can you see in the past it was a support, right? It's not, say, flying like this, it's not doing that. It is rising because it's above, and once it dropped below on this day, it started to drop more, right? Go up a bit, drop a bit, and as of today, it is here. Based on what I have taught you, I believe you will know that this is called measure down, current up, right? This is one of the a good stock, right? As of today, please don't draw a trend line like that. It is totally no meaning because you're cutting through everything, right? Draw something that has touching the wicks, connecting to them, right? And then gentle trend line. As of today, create the alert, right? So if this is a Sunday, you can see that all you need to do is wait for the alert to ring, which nobody know whether it will ring lah, right? Assuming that the stock does this and it goes up, nothing will happen to you because your alert did not ring, so you did not even short, right? So nothing happened to you. But on the other hand, if the stock actually ring, that means the stock is at the trend line. So if you continue to look at a few more days, right, to me, I think this is already called chapter 1 pass. If you know that, isn't the price rejecting resistance, right? EMA is a resistance, and to me, this is also called chapter 3 pass. Look at this candle. This is an inverted hammer at your resistance, right? There's rejection, sign of weakness. So unable to short now because there's only 2 combo, right? So I need to wait for one more. If it happens, it happens. If it doesn't, then no choice, right? So there's nothing you can do. Just wait for it. And then one day the alert rang, right? Take a look. This is not the candle that break out. Why? Can you see that the hourly candle touch but close above? So this is not your confirmation, but this is your confirmation. This is the candle that opened and closed below the trend line. This is called your chapter 2 pass, right? So as of today, if you want to short it, by all means, you can short it at about $61.50, right? Before you short, do your stop loss, I believe all of you should know stop loss is called support plus ATR. Right, in this example, since we are shorting, support is called your intersection, ATR is called your indicator. ATR, create the ATR, change your settings to 4 hours, and the ATR for Coke today is 0.67 if you look at the extreme left hand bottom side, bottom left of this screen, right? Do you see 0.67? If you cannot see that, put your cursor at this red color line. Can you see this is also 0.67? So as of today, my stop loss is very clear. My stop loss is the intersection, which is about 61.6 plus 60 cents. So my stop loss is approximately 62.3, thereabout, right? 62.3 is my stop loss. So once you know that, start to use this function, right, which is called short position. Click on your entry price, which is here, not here, not here, but here. Click and a table will appear, right? Shift your stop loss to your stop loss price, which is 62.3. Please do not put your stop loss here, right? That is called 65.5. Put it at 62.3, which is approximately here, and that is called your risk, which means if the stop hit this line, you will get out. Right. On the other hand, if it doesn't, I believe you should know you are waiting for 1:2, right? So you can see this is risk to reward 2. You are waiting for the stock to come here, to take a bit more at 3, a bit more at 4, so on and so forth. Right. So this is called a swing trade. All you need to do is wait for a while. Let the trade be in your favor. Right. Wow, it looks like it is dropping already. It just hit your TP1. You can sell partial, maybe 30 to 40%, and then shift your stop loss to break even for the remaining, and while waiting for the second line. Right. Just hit my second take profit level. You can take more if you want to. Right. Now your stop loss is your TP1. Right. And then we are waiting for the third line. So you can see that in this example, what happened here? The stock actually hit your TP1 without hitting your TP3, right? So you will sell here, and sell here, which to me, it is a good trade. Why? You sold once at 1:2, once at 1:3, and another time at 1:2, right? The overall trade is still a winner. Can you see if you never sell anything, now the price is here, right? It might even go up and, and do something weird later on. So as long as you have a good profit, there's no harm in taking it, because I think there's always this thing called a re-entry. So as of today, right, if I remove everything, assuming this is next week, I believe this is still called measure down. As of today, maybe current up, right? And I want the stock to come down again so that I can short it again, right? And take a look at the breakout, right? This is called your breakout. If you take a look at this is called your momentum candle, breakout of trend line, right? And if you think that this is near the resistance, which I think it is reasonable, why? If you take a look, this week here to here is only about 1%. Anything within 1% of the resistance is, to me, very near already, right? It's not that 5% away, then you call it near. So if you ask me, I'll say that this is a decent confirmation of chapter 3. There is a support and there's a resistance nearby, and then there's an inverted hammer, and also, of course, a momentum candle. That's called chapter 3. Chapter 1, it reject near resistance, not the best, but reasonable. Breakout. Chapter 2. If you want, once again, you can short here, right? And then wait for it again, but just take note, you only want to short, right? You don't even want to long this stock at all, because it's called a measure down. So wait for your signal to enter. If you think that there's no setup, then too bad, right? But just don't counter trend trade, right? Counter trend trade is caught below the EMA you want to buy. Nobody will know how low it will drop, right? You think that this is cheap, you can buy here. You think that it will go up, maybe it will for a while, right? And for all you know, maybe later on drop further. Like you see now, right? Because the overall trend is more down than up. So don't see that this is a support and you try to buy here. No point to do so. Look, right? Nobody will know where is the ending. So please remember that